another Mag 7 name that we are watching this week, and that's Tesla. Tesla is the first of the group set to report earnings this season, with its results out after the bell on Wednesday. Here with what investors should be watching for in this report is Greg Migliore. He's the editorial director of AutoGuide. Greg, it's great to have you. So I think what investors are asking themselves is whether or not earnings are really going to introduce or help reinvigorate some of that lost confidence that we've seen on the heels of the Robotaxi event. What do you think?
Good morning, Maddie. Good morning, Seana. I think it's a tale of two Teslas. I think there's what Tesla is doing right now, which is its current automotive business, and then what it's going to do in the next year, next 2 years. You look at the Robotaxi event, and it was almost, it was very ambitious in terms of, the mission for a future Tesla, but it was also underwhelming with specifics. So I think investors are going to be very curious as to how Elon Musk manages to sort of marry those two concepts, as well as deliver what will likely be solid, if not spectacular, results.
It's interesting because we know that Elon Musk has said, don't own my stock if you don't believe in our full self-driving capabilities story moving forward. Greg, do you think that do you agree with that? That it's a stock to own only on the basis of its full self-driving technology?
I would disagree with that because I think the core electric vehicle business still is extremely lucrative for Tesla. It has the potential for ambitious growth. I think the disconnect actually is that what Elon Musk wants to do? Remember, it is his company. So that's where it gets kind of, I would say, a little weird, because I think investors and car enthusiasts, electric vehicle enthusiasts might be more interested in the products he's currently making and how he can iterate those. I think his take on things is that the future is going to be all AI and autonomous. I think he's actually going to be long-term less interested in making cars. Of course, Tesla's still going to do that, but I think he has different plans for the kind of company that he wants Tesla to be.
Greg, how important do you think the timing of this rollout of the sub 30,000 vehicle is to Tesla's bull case here going forward?
I think he has to hit the intervals and the timeline that he's suggested. I think investors and shoppers, for that matter, are getting confused and maybe annoyed that this affordable vehicle is not quite on track like it appears to be. I think people want more specifics as to what it will be. We've heard sort of conflicting things, that it could be on an all-new platform. It could also be like a version of some of its existing vehicles. So I think people want details on that. And I think there's a source of frustration around it, because I think investors look at that as something that's very core to Tesla's business.
Something else that investors have to kind of take as core to the business is Elon Musk's politics. And we've certainly seen that at the forefront over the past couple of months, but especially over the last week, where he's been in Pennsylvania handing out $1 million checks to potential voters here. Greg, does anything in Elon Musk's recent activity strike you as a new heightened risk for Tesla shareholders to consider, or is this just more of the same?
Well, I think as the election draws closer, I think he certainly has become even more active than he already was, more outspoken. And I think if you're the CEO or the caretaker of a very large car company, your behavior risks turning off certain voters and thus certain consumers. Generally, it's not good business to alienate, 48 to 52% of your potential customers. And, his recent political actions certainly risk him doing that. And that's not just to say the fact that offering people money for voting isn't exactly legal. I think most people would interpret that. So I think his behavior has already been kind of larger than life. But I think the more political you get in this day and age, the risk you have to your core business, which in his case is selling cars.
Greg, let's talk about GM. The company has been able to reassure confidence there from the street a little bit, just in terms of their direction. They have shifted their EV strategy going forward. It seems like a number of investors have been encouraged maybe from what they've heard from Barra. I'm curious, what do you think is the critical communication point that Barra needs to make clear to the street in order to continue to ride that momentum to the upside?
In some ways, General Motors has been the anti-Tesla, flying below the radar, stacking up some solid financial results, in rolling out its electric vehicles mostly on time. With EV, production timelines, it can always be sort of a moving target. But General Motors has, by and large, done a good chunk of what they said they would with vehicles like the Chevy Equinox EV, the Chevy Blazer, some of the Hummer and Cadillac electrics farther up the price chain. I think the move there is that the CEO, Mary Barra, has tried to communicate that they have a steady electric vehicle strategy. They are talking a little bit about hybrids, perhaps more than they were before, as they're trying to, I think, sort of hedge their bets pending the results of the November election. But General Motors is in pretty good shape. Just earlier this month, they announced like a $325 million venture to get involved in lithium mining, which I think is very creative. It shows that they're thinking of the whole food chain when it comes to electric vehicles, the batteries, and how you make these vehicles. Now, are they getting into mining? Not really, but they're definitely thinking of this ecosystem as a way to broader sustainability for the company.
All right, Greg, we got to leave it there. Really appreciate you joining us and giving us that preview on Tesla earnings. Thanks so much.